a lot of laws and regulations. There are certain things about these chapters I cannot teach you more than just you reading it and you kind of memorizing it, okay? So that's why some of these things we're just gonna fly through and try to explain it the best possible way. So the word insurance transaction, obviously that means to solicit, right? On the exam, you might see some questions where it says, which of the following situations would be considered an insurance transaction? If you're negotiating, if you're quoting, if you're doing a presentation, if you're giving any kind of quotes, you are doing a type of insurance transaction. On the exam, you might see an example of, if the secretary does this, is this considered an insurance transaction? Or all of the following are insurance transactions except. So you might want to you might want to write this down for yourself. Insurance transactions are solicitations, negotiations, sales of any kind, presentations, or advising a client based off of their actual coverage amount in general. So, what is an insurance transaction or insurance contract? An insurance contract is an agreement between a policy owner, often an insured, and an insurer. When the insurer agrees for consideration, so that's there, remember, consideration is the insured or the policy owner is giving the application plus their premium, and the insurance company promises to pay the death benefit. Insurer. Another word for insurer is the company is principal. So the word insurance company, insurer, and the word principal mean the exact same thing. Okay. So this is something that you are going to want to know. There are three different types of places you can do business in. And this is how they're described. They're called locations of incorporations. All you want to do is write these three words down. Domestic is when the home office is in the state, or that you're writing business that the state that the state home office is located in. So domestic is when you are writing business that the home office is located in. So if your home office of your company, not your personal home office, but the headquarters of your insurance company is in New York, and you're in New York, you would be writing a domestic policy. The word foreign, I want you to write another state. So domestic is the same state, foreign is another state, or a separate state or another state. So if your home office is in Atlanta and you live in Florida, we would be a Florida or a foreign insurer to the insurance company because the home office is based in Georgia. The next one is alien. Just put another country. So if somebody lived in Canada and the company was based in the United States, that would be an alien insurer. You want to know those three by heart. You're going to see those on the exam in some facet. Okay. Let's talk about stock companies versus mutual companies. So when you look at this, stock companies are owned by stockholders. So the one thing you want to write is stock companies are owned by stockholders, okay? That's what you want to write down. Traditionally, stock companies are non-participating policies. We're going to write that down. So stock companies are traditionally non-participating policies. So what does the word participating policies mean? We're going to get to that at the bottom, but I'll cover it now. Participating policies or non-participating policies is when the policy owners do not share in the profit or the losses of that company. Then there's something when you're looking into the non-participating policies, they do not pay out dividends to policy owners. However, taxable dividends are paid to stockholders. So remember, we know about a dividend, and an insurance policy is a return of excess premium, which is not taxable, but this is a investment account. So it's a stock company. If a dividend is paid out based by the stockholder, I'm sorry, based off the company paid to the stockholder, then that taxable dividend would be taxable. Remember, dividends are not guaranteed as they're based off a company's profits. Okay, Gia, one thing we want to look at is mutual companies. Mutual companies are owned by policy owners and are issuing participating policies. So make sure you can connect the words not stock company or non-participating policies, meaning the policy owners do not take any participation, any profits or losses, but mutual companies have what are called participating policies. With participating policies, policy owners are entitled to dividends, okay, in which mutual companies are a return of excess premium and therefore not taxable. So the stock company can actually give dividends to the stockholders, but in a mutual company, it's just a regular life insurance company in this example. If they give a dividend, it is not taxable because it's just a return of premium. Do you have any questions on that? Okay. Again, dividends are not guaranteed. They are not guaranteed. Okay, this is what you want to write down right here. Fraternal Benefit Society is an organization formed just to provide insurance to its benefits, for the benefits of its members. That's all you need to write down for this. This is the definition. You remember how I told you a group cannot just come together just for the sole purpose of buying life insurance? When we talked about that with group insurance, a fraternal benefit society is an organization that provides insurance to its members. So they actually form the group for the benefits of its members. Somehow they get away with it. I don't know how it works, but it's not against law, and so it works, right? So make sure you have that definition written down. Okay, so let's look at it this way. There is something called an authorized or unauthorized insurer, meaning does the insurance company have authorization to do business? You want to write this down. Before an insurer may transact business in a state, it must have a certificate of authority. So a certificate of authority is the insurance company's license to do business in that state. So let's talk about the two levels of authority or not authorized business. So the word, I'm going to keep this very simple. These are definitions. Admitted or authorized users are approved to do business in that state. So approved to transact business in the state that you're considered to do business. This is not the agent. This is the insurance company. So authorized or admitted are considered or to be approved to transact business in that state. As you can agree for most, as you can probably think, non-admitted or non-authorized are not approved to do business in that state. Any questions on that? No? Okay. So the last thing we're going to cover is called reinsurance. Let me find the definition right here. The purpose of reinsurance is to protect against catastrophic loss. Reinsurance is nothing more than another insurance company buying some of the insurance company's risk. Because some of the insurance companies actually buy some of the company's risk, which means if they do well, they take some care of some of the profits too. Okay. Any questions on that first part?
I don't have the mutual.
I didn't hear that.
I don't have the mutual one.
You mean you didn't get all of it?
No.
Okay, you want to get so mutual is owned by participating or mutual companies are owned by the policyholders and issue participating policies. They have their dividends are not taxable because it's just a return of premium. And that's pretty much all you need to know. Okay. Am I good to move on? All right. Okay, so let's go through financial services regulations. This part right here, I'm just going to touch on lightly. You're going to have to come back and actually read this yourself again. This one's unfortunately, it's just reading it. So, financial services regulation. This is the organization that monitors everything in financial services from insurance to investments. One thing that you need to be knowledgeable of is the Department of Financial Services. You will be regulated and report to a lot of their stuff as your licensed agent. It says that the department consists of 15 divisions and offices. As you're going through this, make a note of what you need, of what you can hang on to. You're not going to memorize all this. You're not going to see every question on these, but you need to have a general idea of what it stands for. Okay. Within the Department of Financial Services, the Financial Services Commission is composed of the governor, the attorney, chief financial officer, and the commissioner of agriculture. And this just goes through the steps of who appoint to. Major, the two offices. Okay, you do want to know this. The two offices that are established by the commission is the Office of Regulation and Office of Insurance Regulations. So the commission is over the insurance or over the Office of Insurance Regulations and the Office of Financial Regulation. You do want to know that who's over those, okay? So who is the Office of Insurance Regulation? They are responsible for handling activities concerning insurers, including licensing, certificate authorities, rates, policy forms, premium financing, claims, solvency. So they're the one that's actually monitoring the insurance companies that they're doing the right thing. That's a big one. Yeah, you need to have a general idea of that. The Office of Financial Regulation is responsible for all the financial services commissions related to the banks, credit unions, financial services company. So Office of Financial Regulation, they're monitoring more of the bank's side. Office of Insurance, handling more of the actual side over there. Okay, so let's go here. So let's talk about the CFO. You need to know who what the CFO is. The Chief Financial Officer is an independently elected and serves head of the Financial Services Department. You need to know who that is. So the Chief Financial Officer is elected independently and serves as head of the Financial Services Department. So the CFO is the boss. He's the one who holds down all of the stuff that happens in the financial world. The CFO is the CEO of all this. Okay. All right. We're going to move on to the next one. Department of Financial Services. Let me scroll through this real quick. Dun, dun, dun. Hmm. Department of Financial Services. Consumer Services, the division. Okay. Just make a quick note of this. The Division of Consumer Services responds to complaints by consumers. They are the one that if you have a bad experience with the insurance company, that they're taking too long to respond to a claim, something in that nature, they're going to be the one to be there for that. Okay. So let's talk about the rehabilitation and liquidation part. The purpose of the Insurer Rehabilitation and Liquidation Act is to do the following: protect interests of policyholders, creditors, provide comprehensive schemes to administer insurers' receivership. Let's bold this thing down. I can't tell you I've ever seen this on the exam. We're gonna skip that and let you guys come back to that piece. Grounds for rehabilitation. The department may petition in order to. Yeah, again, a lot of this, unfortunately, guys, there's certain things I just can't teach, and there's not ways to formalize that except for you guys to come back and read it. Boom, boom, boom. The department may apply for the court insurers anti-fraud plans. Okay. Yeah, this right here, unfortunately, Department of Financial Services chapter, the part you guys are gonna have to come back and read. There's not much there that you're gonna see on the exam, but it wouldn't hurt for you to look over it. Okay, so we will see this on the exam right here, right? So if there are things that need to get done in the realm of filing and documenting items, right? The CFO and office regulations have the right to examine affairs of every person and entity authorized to transact insurance in the state. The purpose of the examination of the insured is to book and record to ensure that its companies remain solvent and conduct business insurance and compliance. Okay. Where is this? Examinations must be conducted every 5 years, frequency deemed by the office. I can't say I've ever seen that on the exam. In lieu of examination, alien and foreign office must. Okay, this one you will see. If someone is guilty of a misdemeanor or upon conviction of something, they need to send a letter or revoke and send in their license. So if you receive a misdemeanor, Gia, you must send in a copy of that towards your license. Um, okay, so this one right here, you will see this. The Office of Insurance Regulations has the authority to approve all forms. The number you're going to look at most of the time, Jamala, is 30 days. This part is important. All forms must be filed at least 30 days. You're gonna just memorize that and think of that number 30 days. You're gonna see it pretty consistently. So if you see it in a question, if you see it on there, it's probably gonna be the answer. Okay. Let's go through licensing, okay? So purpose of licenses, the age, boom, boom, boom. So this right here says is who can get licensed? Anyone over 18, US citizen. Sometimes they'll ask you, does secondary education matter if you get a license? Obviously, the answer is no. You don't need a secondary education to do that. Boom, boom, boom. Successful completion rate. Okay, you will see this. You will see this. For your life insurance license, it is a 30-hour course for the state of Florida. It will ask you how many hours are for your state to get licensed in. It is 30 hours. If you're doing life and health, maybe it's 40 hours, or it says a combination. Let's see. Any person in the military. Okay, so this is actually something you might be tested on. If you are in the military, you cannot sell a policy to anyone that's ranked lower than you. So if you're an E5, you can't sell an insurance policy to an E4 or below. So that's good to know. There is something called a temporary license. There are certain states that if you just complete your licensing class, GM, you can go get a temporary license. Temporary license lasts up to 6 months. So you want to write that one down. Okay, exemption from licensing. Who does this? Okay, maintaining your license. Okay, every 2 years, you must complete 24 hours of continuing education. Every 2 years. And 4 hours of that has to be in laws and ethics. Laws and ethics are going to be that one that they press out there because they want to make sure that you are doing the right thing. So let's go through here. If you happen to miss your continuing education, meaning you forgot to do some of it, you can sometimes get an extension up to 1 year. And that's if you're lucky. You're lucky to get that, okay? But what happens, Jamala, is if you do 28 hours in that period of time while you're studying, the excess hours will be carried over to your next period. So you want to make a mental note of that, GM. Okay. CE requirements. Yeah, if you do CE in your state for your license and your license in other states, most of the time it will count for all the other states that you're in. I've never seen that it hasn't, but there could be some fancy or some random one out there that it doesn't. But for the most part, you should be able to do that. As you see right here, every license must notify the department in writing 30 days of any name change, residence, address, principal. If you commit any felon or any criminal charges, you must notify in writing within 30 days. You guys starting to see that trend of 30 days? Let's make sure we're on top of that. Appointments. The word appointments does not mean you're meeting with somebody. The word appointment means you are appointing your license with an insurance company to write business. This used to mess me up because it tells you to talk about booking appointments. I'm like, the frick, I didn't understand it. So in this example, appointments means that you are appointed with the insurance company to write. Let me clarify this. You can be appointed with as many insurance companies as you would like. For every insurance company that you write with, you have to be appointed with each of them. So if you write business for 6 insurance companies, you have 6 different appointments. Okay. Um, what is this? 48 months, 45 days. All appointments will be submitted to the department and on a monthly basis, no later than 45 days. Okay. What's this 48-month period? An individual who fails to maintain an appointment, entity writing in class. So this simply says, if you do not have your license appointed with somebody for 48 months after 4 years, they will terminate your license. You worked hard for the license, don't lose it. Again, this right here says you can have a separate appointment. You can be licensed, appointed with as many companies as you like. Okay, what does this say? Renewal continuing education. Your continuing education is due every 2 years on the birth month you were born in. So if you're born in July, every 2 years, your continuing education is due by the end of the month of July, every 2 years, like clockwork. Okay. An appointing entity may terminate an appointment at any time, such as an appointee's contract with a 60-day advance notice. Once the appointment is terminated, the appointing entity must file a written notice with the insurance company within 30 days. What is this? How do you guys feel about this information already? Have you already gone through this chapter, Gia and Jamal? You've already gone through this?
My state is different than yours.
This stuff that doesn't apply to you?
It's like it's 2 years, but like ours is like odd year, even year every 2 years.
Okay, that's good to know. Good to know. And Gia, you've already gone through this part? Look at you. You so far ahead. You far ahead of us. All right. So let's talk about fiduciary responsibility. Fiduciary responsibility is someone that they have to put the client's needs above their own. You are not technically a fiduciary as an insurance agent, but you have to do the right things right here. In the insurance world, they say you have a fiduciary responsibility to collect premiums and not commingle them. So pretty much you can't take the deposit, take the insurance premiums and deposit into your checking account. That's what they mean by fiduciary capacity. Um, let's go here. It is considered. What is this one right here? Commission compensation. It is considered illegal practice for an agent to knowing collect excess premium for insurance. I mean, hey, I don't know if you're doing that. So controlled business, you want to know this. Controlled business is if you write your coverage and 50% of it or more than 50% of your business is with immediate family or business associates. I don't know how anyone would ever know that. But for the exam, they're going to ask you that. Okay. Record keeping. You do want to know this. Maintaining records for transactions is a 3-year thing for premiums. So 3 years to maintain records for payments. The good thing is you don't have to do that. The insurance company holds on to that stuff for you. Code of ethics. All right, this is the stuff right here that I can teach you, that I can actually go into detail. Let's see if twisting and churning is on another one. Let me give you what twisting is. These are the definitions that I can help you with. We're gonna write these down. I might be able to give this to you in a different level. So let me flip this over. So we're gonna come back to twisting and churning. Write this one down though. The Florida Life and Health Guarantee Association. This company is designed to make sure the insurance companies have enough money set aside that if all their customers passed away at the same time, that they could pay out all the claims. This company is the one that is there to protect the consumer. Now, let me make something very clear. You cannot, this will be on the exam. No one can ever advertise that they are covered or they can never use the Florida Life and Guarantee Association in their advertisement. That's an easy question to get right. And to talk about is prohibited. Um, One thing is, this is common sense. It's unfair trade practice to make any statement that an insurer's policies are guaranteed by the existence of the Health and Guarantee Association. This is what I was telling you. You cannot do that. All right. Am I good to move on? Just kind of give me a thumbs up. All right. Unfair marketing practices. Okay. Here, yeah, this is one that we'll spend a couple time on definitions. Misrepresentation. This is when you either publish or circulate any information about your policies. It's illegal. You can't do it. Misrepresentation is giving out any misaligning information. I'm looking at, maybe I should do that more often. So false advertising. Let me find the exact same words that we want to look for. Those false advertising would be making any false, untrue, deceptive, misleading statements. So advertising cannot include any untrue, deceptive, or misleading statements that apply to business insurance. So that part of false advertising, we got to make sure we're on top of that right there. Okay, let's talk about the word rebating. Next to the word rebating, I want you to write the word to induce. Let me see. It's an inducement, which means you're offering someone something in return for them to buy a policy. To give you an example of a rebate, Gia, it would be, hey, Gia, if you buy this policy for me, I'll give you an iPhone, which I know you love that. Or if you say, I'll give you Jaguar tickets if you get this policy, or I'll give you part of the commissions from my policy from this sale if you get a policy. Those are certain things we cannot do. We cannot do that stuff. Induced rebating is against the law. You can't do that. Um, Remember right here, agents are required to maintain copy of all rebates scheduled based off of the last 5 years, most recent 5 years. So when you are an agent, you are allowed to give your clients gifts. You can give them stuff for this for whatever sake. But the value of it cannot be more than $100 in 12 months per person. So you can't give someone a $125 gift card because they gave you a sale. But you can give them stuff. Now, there's a difference between gifts and promotional items. If you have a promotional item, which is a coffee mug or a pen or a t-shirt that has your branding of your company, that's promotional items. You can give as much of that away as you want. Okay. I want you to write the word coercion. That is to intimidate. It is to, when you see the word to intimidate in the question, the answer is coercion. Dun, dun, dun. The way you can use this is when someone uses their physical or mental force to intent to induce someone to buy insurance. So if someone is, let's just say you're a big person and you're sitting at a table with somebody, you try to intimidate them to buy insurance. I don't know if that's going to work, but you can't do that. So just use the word to intimidate. Okay. The word sliding. The definition of this is you falsely tell the customer it's required by law that they have to buy more coverage. So sliding is when it says that you tell the customer they are obligated to buy more coverage by law. And you can't do that. Okay, any questions on that so far? Okay. So let's cover the word churn.